All right, everybody. We'll do a quick test here. I'm just going to have my phone on as well, just to test through. Tyrone, how are you? Welcome
Thank
to the
you,
weekly webinar,
Thomas.
everyone. Okay, we'll just quickly test this, guys. Can you hear Tyrone pretty clearly? Just make sure you can. Keep saying something, Ty.
Can everybody hear me? Hopefully you can, because tonight's the first time I'm coming through in stereo, full stereo sound. Surround sound if you've got 5.1.
I'm just listening. You can hear this, guys, but we'll start in a second. Yeah, that sounds sweet. That sounds really sweet. Okay, it sounds like everyone can hear Ty, but I would like to just confirm that. Oh, welcome everyone to the FX Evolution Weekly Webinar Series for the 19th of May 2021. This is, of course, our live market analysis series. Just a little bit of technical stuff there, guys, because we have had some problems. We've had dropouts, Australian internet, Starlink, bring it to us, or whatever else is going to be the new internets of the future, because we need it bad. But Tyrone, about new technology, those crypto coins, man, they are, I tell you what, maybe the bear's done this. They've pulled out all the stops. They've taken away the buy opportunity, and they're certainly punishing the markets right now. What are your thoughts on the Bitcoin?
Yeah, the Bitcoin's an interesting one. Look, I'm not going to say I'm surprised that we're here. We have been talking about it for weeks now, so I'm certainly not going to be surprised by it. But I think that the speed that it got here certainly does concern me. And for those of you who do the Q&A with me on Thursday nights, I did say that I was going to take a long position around that sort of 42, but it fell so quickly that I just actually didn't do it. I don't like markets that are manipulated by a tweet. We had that through the Trump era, where the S&P was flinging around the same way just on tweets. That's just it's wrong. Thomas and I were talking about it before the webinar. Like, he should be indicted for it. He should be, held to account for, basically manipulating a market. He knows full well what he was going to do to that market, and unfortunately, a lot of people get burnt by it. And it's sad, really.
That's the sad part.
Markets don't interest me. I like the tried and true tested method. Although we call that level, I still wouldn't be getting involved in the long here because I just simply don't like things that are manipulated by one man. That's what it comes down to.
Yeah, I think it's a lot of stuff going on there. Of course, we'll go deeper dive crypto probably in the YouTube session a little bit after this. However, today's all about, of course, Forex, indices, and a little bit about the BTC. Quick risk warning before we get started, because there are good moves in a lot of markets right now. It is important to, of course, understand that any of the information contained in this webinar or video that you're watching live right now is purely for educational purposes, and the information presented must be considered only general in nature. The information provided does not take your specific needs or circumstances into consideration, and you must look at your own personal situation and requirements before making any financial decisions, and seek independent financial advice if necessary. So Tyrone, as we always do, let's get straight into this market. Let's just quickly switch over here to the screener, and you'll quickly see that we've got dollar index is going to be the first one we're going to discuss. And I think we'll go over to not the weekly, we're going to go to the daily to start off with. And look, it's coming up to a zone right now that's really interesting. So it's actually about to touch the 90. Now, we know that the 90 was previously quite a lot of support, Ty, and it's testing from the bottom up. So yesterday it closed below. Now it's coming back. Do we think that this point is potentially going to act as a decent level of resistance? Is this an opportunity for some traders out there to look at?
Yeah, it's do or die for it at the moment. There's no question about that. I'm still, look, what we were also talking about is a decoupling of all of these markets at the moment. You'll notice that nothing is moving in sync as it was a week ago. S&P is falling, dollar index is falling, US dollar yen's going up. Everything is all over the place. Now, that is good. All you have to do is just adjust and this is why, one system, this is why so many EAs run into trouble, because they never allow for this. They don't allow for a decoupling of the market where, the same consensus doesn't apply. So there's nothing wrong with trading all of these markets. It's just that you shouldn't be using them as a base. For the only one you still would use, obviously, is the dollar index and the euro, because they are completely aligned. But aside from that, any other correlations you've got to be really careful with. So you must be, in my mind, this is looking shorter rather than long. I mean, you look at it and you sort of think, well, that's a roll reversal zone, if ever I see it. And I think its real support is around, close to probably the 88.80. So you could definitely see it, getting down into that sort of level again. I would be, very conscious of the fact that it's probably going to test that 90 level, and it would want to really spark up from here. I would want to see a decent break, and it's got to be on a daily chart. None of these small time frame bits and pieces. It needs an absolute daily close above that 90 for me to get excited about that one. And if it does, 90, 80 to 91 is the target you're going to go for. Obviously, the euro is the trade that you're going to look for. It's hitting resistance, no question. It's broken through it, but a resistance there. Just very similar to what the dollar index has done. And again, we're looking for either a retest of that. There's two trades here, and I don't mind either of them. You can absolutely trade either of those with confidence, knowing that the market's got enough volatility to actually get you to the promised land of both trades, but you just have to wait for the price action. Don't try and guess it. So if you're not already in it, you may well be already in it. You might have longed it off the 20 moving average, which is certainly nothing wrong with that. But if you're not in that, now you've got to wait for either the retest of that level there, our yellow line around that 121 sort of 80 area, or a break of that zone and a retest from the bottom. I wouldn't take the initial break. Be warned. Don't just take a daily break of that 121.80. I would probably wait for a retest. I would be very, very conscious of this level. It's proven to be a real obstacle in the past. I would wait for a bit of a retest on a smaller time frame at the very least before I change it up on that trade. But both of them very reasonable trades on both sides.
Yeah, I think they're both very reasonable, Ty. I'll just answer this question here from David Riley. I think he's talking about crypto market. I do think, my personal opinion is it's not just, of course, the Elon tweet. You've also got seasonals in effect here that happened last time with Bitcoin weakening at a very similar time. And then on top of that, I think derivatives are being traded like never before in the crypto markets. And this is clearly bigger players coming in to manipulate and take out what is basically new margin. I mean, a lot of people that are trading crypto right now, they've never had margin, Ty, and you can now get it from online random brokers offer you 10x. So
I mean, look, we did try. I mean, look, we did our very best without trying to offend half the world. We did try to give you the warning at 60,000 that it could drop, and it could drop very, very sharply. And a lot of what's going on here is probably the bigger players in the game taking advantage of the weak. And the margin, both of them really fall into that category. And yes, it might be a catalyst of a tweet, but at the end, big money wins the day, and that's why you've got to be really, really careful at those very, very important levels. And just while we're on the topic too, I'd like to say a big thank you for all of you who are congratulating us on our 60,000 YouTube subscribers. Unlike Bitcoin, we're not going to 40,000, we're going to 100,000. So thank you for reaching that 60,000 with us. And we will not be falling like the coin. So you can bank on a winner here, I can tell you that. But thank you very much for all of your thank yous. We've had heaps of them, and we really do appreciate it.
Oh, thanks very much, everybody. Look, Ty, this was a great trade. Congratulations to people that got this one. This pound was beautiful. Last week, we talked about it closing or getting strength. It then, of course, pulled back. You can see here the pullback back to the 140 zone. Long leg doji. Decision made. Oh, my God. Very nice trading. And you know what? This could be a stock. This could be a crypto. This could be a soft commodity. Yeah, I said it. And it doesn't really matter what it is. We've got a quadruple resistance being crashed through. Pullback, long leg doji decision made, exactly where you expected. That's one that I would put on the wall, Ty, and I would look at that and I'd go, nice. and you think I'm kidding? I might actually put it on the wall. That's a nice one. I like that one.
I would actually like to see a picture of that where your cards lie on the.
Mate, I'm already thinking about ideas. I'm thinking about ideas. Don't worry. There's going to be some new fandangled things happening in the background. Eventually, I'll make it a little studio down here. So look, Aussie Thai, the odd US dollar. Lots and lots of random trades here. I mean, we've had like a big resistance around that 78. Then we've got big support around the 77. This thing, it on the surface doesn't look like it knows what it wants to do. But I'll tell you what, there's obviously traders going in here, and they're obviously trading both sides. I mean, we have had false breakouts. I'm not sure if the breakout's the best option, but damn, these levels are compelling. I'll tell you what, look at these bullish hammers that have come off here twice. I saw that one, and then I saw that recently, and I thought, damn, that looks pretty bullish. Then you get all these little wicks, you break above the wick, where's it going to go? 78. So there's trades within trades here.
Oh, absolutely. Look, anyone who does Q&A with us and on Thursdays and Friday Market Watch would know that we talk this one to death, and here it is again in the middle of the 77 zone. So yeah, it's almost an ongoing joke now that every time we do an analysis of it, it's there. But most importantly, every time we talk about it, it hits the key levels that we always talk about where you should be aiming for, and then it ends up exactly where it is, which is actually a trading bonanza when you are scalping that range. That channel is strong, make no mistake. The bottom 77, the top 88, extraordinarily strong channel. Is it going to break out of there eventually? Well, of course it will. But in the meantime, while it's there, trade it to your heart's content, but just be very, very mindful of where you're entering it to make sure that you've got enough room to get to the bottom and enough room to get to the top without having a stop loss that's at too much risk. But it's been really, really good scalping. It will break out eventually, and when it does, it's probably going to run. Well, it's either going to go to 80 cents or it's going to go to 74. That's what's going to happen. But until it does that, it's no point preempting it. Just trade what you see, and trade inside those zones. I think it's been fantastic.
This one also proves when it closed above here, it was meant to go to 79. It stopped just before, so that's that 80% rule we talk a lot about in the course. So very, very interesting stuff going on there. We'll move over quickly, Ty, to some other pairs. Let me have a look at this euro pound, because I thought I saw this on the 8-hour here, but we'll go to 4-hour. And I thought I saw the euro pound. It's bizarre. It looks like the euro is trying to strengthen against the pound. Let's have a look at the daily here. And I know you want to go through US dollar yen. I know you're hankering for it because you got a great one there. I feel it. I'm feeling it, guys. Actually, maybe a little bit too soon to tell. I mean, I was looking at this just before and I thought, wow, we've got some kind of like support here, bullish hammer work. Then we've got a quick reversal and we're kind of finding a point where there's clear resistance here. We get a closure above these wicks. I'm thinking bullishness to 87. I mean, Ty, what are your thoughts about that one?
Yeah, I think it's got a lot of trouble in front of it, but by golly, if it breaks that trouble, I think the sky is very, very blue for it after that. And I think straight into the 87 would be a start, but I think it's a good scalping opportunity. Look at, I mean, that wick action at that sort of that 87 zone is horrendous, but it needs to just be mindful that there is a level here that has to get broken. So we want to see that, but then of course, if it does break this level, and we get the series of higher highs and higher lows on, basically it's an 8-hour chart. But, and that's a good enough time frame to be saying, well, it's there. I like 8 hours are good because it does, really represent the whole market open, which is pretty good.
Yeah.
So, don't think because it's not a mainstream time frame that it doesn't mean anything. Like a higher low on an 8 hour is more important than a 4 hour. Make no mistake. It's like every rule, the bigger the time frame, the more important the signal. Don't worry about that. So, but we need to see it. And if we do see it, look at what happens. We've got a very important zone behind us. We've got 3 very key moving averages behind us and a very, very clear run up to 87. So I think pretty good trading there. Yeah, wherever we found that one. Whoever came up with that one's the
it was me,
on the money.
Pat me on the back. No.
That you? Okay, well.
All right,
that's a good trade.
Let's go over to the US dollar yen. Probably someone in the room got it, I don't know. So you've been all over this one on the trend line, and we've got a question here. Is this all Forex? Look, we'll go through the commodities, and we've got some indices work to be done as well today. Maybe a little bit of sneaky crypto.
What's wrong with Forex, whoever asked that?
Not everyone loves the Forex part. Not everyone, like we originally, of course, had a huge amount of Forex followers. So we've got to do it all, guys. We've got to do it all. The TA is good through Forex. It's one of the better places to start actually with TA. So you correctly identified what I think is a great trend line here, Ty, and you got all over that on the Tuesday market watch. Is that correct?
Yeah, and just if anyone didn't know, if you did do the Tuesday market watch trade, just make sure you're breaking even now. So you should be well and truly broken even at this point. We do not want it testing the entry point now. Absolutely not. If it does, it's no longer the trade we thought it was. And it certainly tested the patience. I mean, it's taken 2 days well, not 2 days, it's taken 24 hours, but it feels like 2 days. And boy, oh boy, it got within 4 or 5 pips of that stop loss too. So. Really? Yeah, it tried hard to ruin the party, but yeah, if you're in it, make sure you're broken even. We don't want that entry point tested again. But yeah, it's done the job. It came off the trend line, and it's off and running, and it should be hopefully within range of our first target of about 109.50 to 57, depending on where you entered.
I'm getting even greedier than you in some ways, but I do agree with your first target. This trend line here is cool. Like we've just closed above that, and what a great level to close above. I mean, you think about any stock, you think about any index. Whenever you see a trend line like this means participation is coming back into the market. I got a BTC trend line like this one a little bit later, Ty. I got a Bitcoin trend line that you can look at as well. But this is very similar. I mean, this is basically repair is made in terms of structure. It's moving through. Then you've got further repair. And then as you go to that first target Ty's talking about, it's going to that first resistance. And then it's still open even up to the 109.80, Ty. I mean, and above. You know, it's some good stuff. Some good stuff.
Yeah, it's got more long in it, but we went for a 2-to-1 on that trade. So we're quite satisfied with that. But I agree. I think it's got... and one thing about the yen, when it moves, it's like a train. So, you know, if it blasts through those levels, you know, it'll have 110 in its sights. But, you know, or depending on how you're trading and where your stop losses are, of course. But, yeah, good. I think it's a pretty good one. I think it's still got a bit more in it.
Now, I'm sorry that we were correct on gold because it is coming down now. But I think this shows again and again and again the difference between traders and investors, Ty. I told people not to be greedy pandas on this one. And unfortunately, I'm sure there are a few greedy pandas on it. So gold's pulling back, and I think it makes perfect sense. We get that closure. Remember, our original target was 18.25. Then we get out, and we go, okay, look, you know, good work. We give ourselves a clap because it was damn good. And then it goes a bit higher, and you think, oh, I missed it. I should have got that. Never fall into the trap of thinking that you should have held the position longer. You took the easy gravy. And Ty, how many times does this undo good traders where they see it continue on and they think, I've got to get back in?
Yep. You need to really take the mindset of no one ever goes broke taking the low-lying fruit. Okay? That's the key. That's the key with, well, it's the same thing. That's the key with trading. You've got to be... There's and this is for Mr. Negative Forex, whoever that was before. That's exactly why you look at so many charts. Now, in all seriousness, that's why you don't want to get fixated on only one instrument, because then you find yourself compelled to trade that instrument and look for things that actually aren't there. You need to know when to walk away and look for something else, right? There's so many opportunities, and this is why we always advocate the fact that you should be opening up, you know, all sorts of different potential income streams by, you know, looking at gold, looking at currencies, looking at stocks and options. Because when you do that, you're not going to be compelled to only trade one thing. But there's so many traders out there that are fixated on, you know, trading only oil or trading only gold, where they're looking for trades because they don't want to miss the opportunity, but they think there's no other opportunities out there. That was clearly going to want to come back, you know, and realistically, like we've been talking about this since 1780. I mean, it hit the target. You've got to know when to take your profit. It's one of the hardest things for people to sort of get their heads around, because greed does kick into it, but just be really smart about it. Okay. If you're going to be a successful trader, you're going to be smart about where you're taking your profits. Sometimes it's going to go past it. Yeah. No question. Mind you, like when Thomas and I trade, we've been doing this for a long time, and make no mistake, the amount of times that we take profit and the thing just keeps going like a train, is unbelievable. But will that affect the way we trade? Absolutely not. Because you know what? You've got to be happy with what you've taken. We've picked that zone for a reason. We haven't pulled it out of the sky. Like, we've taken a particular take profit level for a very, very good reason. Now, sometimes it's going to overshoot. Yeah, good on the people who are keeping on going long in that regard, but don't ever be sad that you've missed it. And most importantly, don't try and jump on again because you think you've missed out. Goodness.
There's always another opportunity around the other corner, Ty. And speaking of other opportunities on gold, look at this 50 exponential, a great level, I think. One touch, buying off. Two touch, buying off. This is the 4-hour chart here. What would happen if it comes back to this 50 exponential? You've got previous resistances, and of course, you've got the magical 50 sitting there. It's a good zone to be looking for lightning bolts, consolidation, and other things to take
Absolutely.
it
Yeah.
I like it a lot.
On a 4-hour chart, so if that 4-hour gets down there and you see a lightning bolt, say on a 1-hour chart, that will be enough at that level to say, you know what, that's worth a shot. And the great thing about that trade is there's two targets, right? The first one is where it's already reached, the 1872. So you can take off some good profit there. And you can leave that. You can leave some more running for the next big move, which is up to 1900 if it breaks that zone. But the easy pips, and this is what we're talking about, the easy money and the low-lying apples are the 1870 zone, because it's already been there, it's already tested it, and you know it's a good chance of testing it again. That level is also coinciding. Is that the 200 moving average? Yes.
Yeah.
Daily. On the daily. Yeah, so, you know, that's a very strong level. But at the same time, don't just set a pending buy there. Wait for the change of trend, okay? You need to let it get there, let a lightning bolt happen on a 1-hour chart, and then off we go to the moon again.
To the moon, that's right. Silver will go with gold in this case, so we probably don't need to look at silver too much. Maybe it continues down to the 20. I mean, obviously, a little bit crappy. That candle yesterday really took the lights out of the squeeze going any higher for now, but at least now we have pullbacks to this level, and we knew that this was going to be a tough zone for it. And, of course, now the next zone is, can we pick back up, close above here, and then 30 is a formality after it gets above that high. So we'll keep going over silver a little bit later. Ty, let's talk about these markets, and I think the easiest way to talk about the markets actually the US 100. So let's talk about the indices because this thing's completing in the futures. The fake market futures are actually going to complete the transaction, and that's annoying for many traders out there. Basically, we had a double top here on 2 hour. And you can see the double top. You can see the completion, which is coming down.
The role reversal zone, I might add.
Yeah, 13.4. Yeah. So 13.4, amazing supports, resistances. I think we've been completely on top of this one. I don't think that we ever got unrealistically long. I think we've been pretty strong at picking the levels. If I was looking at this today, Ty, and we were coming in, let's call it fake market futures, and we're coming into the 13,000, I could actually see a bit of a rally here early, with an early rally coming back up to the 13.2 and then possibly some further selling. Now, if we get further selling through the day and it bunches off this, that's not a trade that I would take, by the way, because it's against trend. But if you're thinking about, where's the next stop, I'm thinking it's 12.7. I've done a lot of work on this, and I think that I'll see what Ty thinks of this one. So basically, Ty, if you take this leg and you extrapolate that out, see how that leg, it's been 30, so it's come back also very, very similar, which is what we want. So if you notice, the pullback is the same kind of pullback again, which means that, this is possibly even the expectation the third time. But more importantly, the legs are equal to the 12.7 level.
Yep. It's a third leg. That's
12,
trading
12.7.
101. Of course it's going there.
I think so. I think you got to be a bit more. I can't just come out and say crazy random stuff sometimes.
But look, that's what technical analysis is. We talk about the third wave all the time, and the thing is, it's setting up for it, isn't it? I mean, and this is no surprise. I mean, we're at the tail end of May. Like, we know that May is the notoriously the second weakest month of the year. So this is just a market cycle as well. I know a lot of people are doom and gloom and saying, all of the tech stocks are blowing up, and this is just the market. It's just what it does. So you want to be embracing it. Like, do you want to be shorting it below 12.7? I wouldn't be very keen on that, but I'd be looking for entry points. Now, if you're already in this, should you be taking your profit? Well, probably you'd be locking some in, but you'd be leaving some on the table for that 12.07 because that's likely where it might go. But I don't know. I wouldn't be just jumping in right now because the problem is it's got serious support right in front of it. So you wouldn't want to be entering here. You wouldn't want to be entering at the 13,000. You should already be in. And if you're not in, you've got to wait for a pullback, right? So that's what you've got to really keep in mind. Don't get sucked into just jumping on because you think it's going in a place. Wait for a reason. Very, very important to wait for that reason to get in. It shouldn't just fall in one red candle. I mean, you're probably going to see your ebbs and flows all the way down, just like it did on the way in the second wave. So just be patient and wait for a good entry point. Don't just jump in, but it's got a really, really good chance and a very easy projected target to get to.
I think the reason that projection is going to come in as well, Ty, is the SP 500. We've got a double top here again on the futures market. More importantly, we're going to open under the 4120, a very important zone of support that was closed through. The SPX is going to be the easiest one for us to do the analysis on here. This is where it closed yesterday. You can see the level. What I think we're going to open at is right now, looks like, what was the US 500? Trading at 30.86. So I think we've been on top of that pretty correctly. And basically, we've got right on this zone, 30.86. It could come back, test the 41.20 from the bottom up again. But I'm thinking this goes down to the 39.60 at least, Ty. And the reason why is going to be the weekly 20. The weekly 20, the mean reversion that we want to get back to. It's been a great zone, and the market is tipping over here in May.
It's doing what we were hoping for, because what all this is going to do is create some really, really nice opportunities to go along very, very shortly. So don't be all doom and gloom about it. This is just a natural cycle. We needed this to happen, and it's going to provide some really good opportunities to go along. But we've got to be just a little bit more patient and wait for them, of course. Wait for those key levels.
Yeah, so I think we've just got to be a little bit more patient on this. If day traders were coming in here, Ty, the way I'd look at it is the 4120 is probably the zone I'd be targeting. So let's say it comes back up, test this level, small lightning bolt down. I think that's a fair bear opportunity here off the 4120 from the bottom up. Your thoughts?
Yeah, definitely. I think it's this is another one that we've been kind of calling and hoping for a little bit too, because I think it's provided some really good trading opportunities. But again, that's where you're going to be starting to enter the longs. I'm not saying that's the last place it's going to get to. I mean, I think it can go lower, but you want to be scaling in at that point too, right? Like that's the thing. You want to be sensible about it. There's no real reason for this to absolutely flash crash. This is just what we want here is a slow and steady move down. And although it looks really, really aggressive, it hasn't moved a hell of a lot. I mean, let's face it. It's just that it looks far more extreme because it's been going up for so long without any pullbacks. But realistically, this is only a pretty small pullback in the grand scheme of things. And you only have to go to a bigger chart to really see that. This is just a market correction, and that's why I think it could easily go to 3750 to 3600, and even that wouldn't be extreme. You'd say, you know what, I'd cop that all day. That's the 20 moving average on the monthly. I think that'd be a really healthy pullback. That'd give us some amazing entry points to go long on it. Unlike some of the other individual stocks that you can see, you can bank on the index, being strong in the long run because, that is basically it's the currency of the whole country, really, when you think about it. So, all the companies are obviously making it up. So that is the true driver of the economy. And, for all intents and purposes, it's not going that bad. But what it wasn't doing was replicating the price that it was at. It needed to, reset, readjust, and give everybody a chance to just take a breather. So, it could get there, but you'd be loading up probably every 100 points at about 39.50, I reckon.
Yeah, so just as we're speaking, we're about to see a new low here on Bitcoin. It's actually coming through. I've got an alert for it. But before I guess we talk about Bitcoin, I mean, the whole thing is just melting. Like, you want to talk about face melt right now. This thing's down hard. Like, you can see it on this chart here. We've got 25% down on VET. BNB's down 23. Uni's down 22.9. The amount of huge amounts of leverage that will be getting taken out of the market. I feel kind of bad because when you see something like this, people are blowing up.
That's the sad part. Absolutely.
The amount of people that just lost tens and tens, if not hundreds of thousands of dollars is real here because this is going underneath a lot of people's expectations. And look, as we're talking, this thing's melting off like 31.15. That's insane. What can we say about this one, Ty? I mean, basically, there's no stopping it at this point until
I would not be getting involved. I hope for everybody's sake that people aren't just buying every dip that comes and just doubling down and tripling down on this because, realistically, what level can something get to when it hasn't actually got a base against? Really, is anybody going to be surprised if it goes to 30,000 or 20? For that matter, like it's not like this is not an index. That actually has something behind it that is substantial that can be actually validated. So don't get caught into the trap of trying to double down or triple down on it, goodness sakes. The problem with Bitcoin, and this is why I'm against it a little bit in terms of what people, how they perceive any coin actually, is for some reason, logic, stop losses and everything goes out the window. Now, for all intents and purposes, if you're a Bitcoin trader or if you're a coin trader, this fall shouldn't have hurt you more than 1% of your account, technically, right? But I bet you, for the most part, most people are blowing up because for some reason, logic and normal good trading habits go out the window on the coins because people go in for the all or nothing approach. And realistically, just because it's
we got some crazy noise.
Oh, I can't hear anything.
God, I don't know what the hell that noise was. Bitcoin wisdom or something. This chart I hadn't dropped was going nuts with alerts. So obviously something.
All right, okay.
So it's
Okay.
like da-da-da-da-da-da-da. I'm like, what is that sound? Keep going,
I
Ty.
think
Sorry.
they're all the Bitcoin lines being taken up. So
That was definitely my Bitcoin alert. I think 38,000 was hit. I think, or very close to it. Yeah, 38.2, and it just went psycho.
Yeah. So look, my warning to everybody, in absolute hand on heart, be really, really careful. Don't try and catch the bottom of it. Wait for it to start to, pick up and start to go longer again. If you're going to, attempt the long, this has broken the key levels now. So realistically, it's anyone's guess where it's going to land. So just trade it with real caution. I hate people losing money, and I know that I think a lot of people have lost a lot of money in the last couple of days, which is actually quite sad. And again, on the basis of, or on the catalyst of other people, big money, making money. And that does annoy me, actually. That really does annoy me.
Yeah, I think these are some really trying times for a lot of people out there. You can just see 37,555 just got hit here on BTC. I mean, it's getting crushed. And unfortunately, people lose a lot of money in this time. I mean, look at this. Look at this. It's terrifying for a lot of people out there. Look, Ty, I mean, there's nothing much we can say about this other than the fact that it's falling knife, and that's what's going to happen. And the next step is really going to be some kind of proofing. So how do we get to a proof? Well, we're going to need something like a 4-hour chart, and you can see here the type of levels that you're going to need to do. You're going to need to see literal recovery above this type of trend line we're talking about before. The trend lines and how they're so important. This is the type of zone we're at right now. We need to see repair all the way up to this zone, and we're going to have to see support being found. I mean, 36.82, just insane stuff. And this
Look, and the volume's a scary part, because you know what's happening now. It's the same thing that happens when the stock market has a meltdown. Margin calls are being hit.
Absolutely.
Simple as that.
I think
so people aren't actually selling. Make no mistake, people aren't selling their positions here. They're being forced out of their positions.
Yeah, absolutely.
They're getting closed out.
The first time I've ever seen margin throughout all networks, and this is Wall Street really punishing traders for taking those kinds of leverage. Because I mean, you see here, look at the Doge, look at the dot. I mean, even the dot is holding up 18%.
That leverage should never, ever have been allowed. It blows my mind.
Well, when you start leveraging crypto, I mean, what you're effectively doing is you're taking some mega risks.
You're a quadruple gearing.
Well, yeah, because it moves 10% in a day. So because it moves 10% in a day, or 20% in a day, or 15% in a day, or whatever, you're gearing in a market that's already geared. Exactly. It's like quadruple gearing. So look, pretty sad stuff here for many BTC traders. Unfortunately, look, I expect a lot of wild whipsaw action here. I think a big amount of volume is going to come in. You can see the volume coming through. It's going to make for an interesting stream later. I'm sure there's going to be a lot of people in the chat. But this is probably one of the biggest sell-offs I've ever seen in crypto, Ty. I sound kind of like, wow, because it's not just that it's a big sell-off, it's a sustained, hideous sell-off. So these are incredibly rare in the markets. Like, you don't always see this type of thing going on. And it hasn't happened since 17. I can't remember this since 17, 18 like this.
This is systematic selling. This is not a freak black swan event. This is actual systematic, absolute selling at very key points and sustained, which is why you shouldn't be trying to catch it. Can it reverse from here and go all the way to 50,000, by tomorrow morning? Probably. But I think it could be just as easily at 30.
Yeah.
I'm not willing to bet on it, and neither really should you. I wouldn't have thought.
No, I think the risks here are too severe. Wait for clarity would be the way I'd look at it. Clarity. Yeah.
And clarity is going to come in the form of a 4-hour change of trend, right? So you got to go back when in doubt, go back to the technicals. You want to see a 4-hour sustained series of higher highs and higher lows. Not at a key level, because key levels are out the window now. But you want to see a change of trend, because a 4-hour swing, like of a series of higher highs and higher lows, is going to tell you a very, very important message that for at least 2 or 3 days worth of trading, prices stopped falling and started to increase. It'll take 3 or 4 days for a 4-hour lightning bolt to happen, and that's what's important. So, and then you've got some a little bit more information in front of you about the momentum being basically ground to a halt.
Yeah,
that's what you want to be looking for.
Look, I mean, this is we're witnessing history here together. I mean, it's not good history for a lot of people, but certainly history, Ty. I mean, we have not, like, I literally I've followed coins for a long time, and I can tell you I haven't seen this. Well, I've never actually seen this type of sustained sell-off in crypto. I've seen big falls with big pull-ups, but never a fall followed by a degradation like this. I mean, we're talking in a matter of days, we have degraded 37%, Ty, after already degrading in the biggest coin in the world in a market that is huge. I mean, I just want to click this. I'm going to click this button right now. Ready? Poor. That was 2.6 or 2.4 or something like that. That's a huge amount of money coming off the market. You can see it just here. So incredibly sustained. Yeah, it's happening during this webinar. I mean, amazing stuff, but also terrifying. All right, so what else do we want to cover, Ty? There's nothing we can do in crypto world. We have to wait for the thing to turn around. US 10-year treasuries are up. What are your thoughts on inflation affecting the market? My thoughts have always been that realistically, once we get to, we always reprice back up quickly, like we did with from the GFC. What are your thoughts about the 10-year here?
Yeah, I think that, a lot of this has already been priced into, effectively the S&P 500, of course. Like, a lot of this has already been factored in. People have been talking about this for basically as long as the rally's been running. So, it is technically sound, but it's got, it finds its support at the 20 moving average, as you can see there. I do like the idea that it's going to go long. How that's going to affect the overall market, whether it's been factored in enough, I'm not really sure. That I'm not sure of. And it's hard to tell when a market has done what it's done. But this is very slow moving for me. It's not. It doesn't excite me. I've got to say that the US 10-year doesn't excite me. I'm going to put it out there.
Yeah, I think the US 10-year excites me from the perspective if you're a big bear. Because if the US 10-year starts spiking through these highs, what's going to happen is it's going to kill the Nasdaq. So, like, do I actually see that as a massive opportunity? You guys know my feelings on this. I don't believe the US 10-year is that important until it smashes through 195. I think the reversal is pretty normal. So that's pretty normal stuff. Ty, VIX.
I mean, that would be very horrible. That would be very horrible at that level.
Oh, at 195 plus? Oh my God. Yeah, that would be terrifying. The whole market would start like whinging, and you could see big falls there. This is the VIX volatility index, obviously spiking here, 10%, 23.5. If we go the way that everything's going in the markets at this stage, I could see even people being forced to liquidate potentially some of their positions in stocks, and them being forced, because of course the crypto, they might be forced to actually potentially liquidate positions, which could have an adverse effect even on a $33 trillion market.
Yeah, absolutely. Yeah, absolutely it can. I think the VIX is going to be very interesting. I think we saw a really big spike last week, but I think that, I think the market's moving as fast as it was last week and almost looking even more bearish. So it's going to be really interesting to see what this one does. One to definitely keep an eye on. It's going to be a very interesting Q&A. I think we could be in for some fireworks tonight, up or down. I think something exciting is going to happen. I think we're just going to sit here. I think it's going to be a very interesting Q&A tomorrow night. Goodness, we might even open it to the public again.
I'm absolutely gobsmacked by these moves, guys. You can probably tell I'm just looking at it. I want to look at it. I'm just like, oh my God. It's just like, wow. Yeah. Okay, well, let's take it over to the room here, Ty. If you've got questions about things you want to be looked at, I can see one here from Paul coming in, looking at the ASX 200. Let's do that one. And we will load up AU 200. So AU 200, 6.9, Ty. We cover this market a lot during the week. I'm very happy we employed the strategies we did, options, because otherwise I'd be looking at this going, damn, why'd we buy up there?
Yeah, absolutely. Oh, look, let me tell you a story. I'll tell you a very, very quick story because I know we're running short on time. But and this is about not getting caught in the hype of the market, right? I had, which actually closed tomorrow morning's tick. I had an option spread, a bear put spread at 7,000 and 6,900. Okay, so basically what that means is for me to get my full profit, it has to be below 6,900 on the opening bell tomorrow, and that will be good. Even though the market was in absolute meltdown, and at 6,920. I actually closed that position. and still made a profit, but not the full profit, nowhere near the full profit. It would have easily been so easy for me to get sucked into the market's falling anyway. It's probably going to be more than likely tomorrow morning. It will be probably under 6,900. It would have been full profit trade, no problems about that. But the thing is, you've got to stick to your plan. When you're putting in an option spread, it shouldn't be coming down to the very last day where you're hoping that this could easily recover to 7,000, and it'll be a full loss, right? So you've got to stick to your plan. And when you've got a plan, even though it looks like the market is just absolutely capitulating, I still only took half the profit instead of actually risking taking the whole loss. And that's what options give you the opportunity to do. That's why I love them, because it wasn't looking all that good. That whole position wasn't looking all that good only 24 hours ago, when the market was trying to push into 7,100 again, right? So, and had that been a stop loss like a normal trade, that would have been over. That trade would have been over weeks ago, actually. But options gave you the absolute opportunity to go all the way to the line. But even though it went to the line, you still got to do the right things. Even though it looks absolutely like a mozza that it's going to be down there, you just don't do it, because that's not what trading is. Now, at the same time, I've got 71 and 7,200 spreads that are going to be completely fine, obviously, unless it's the world's greatest recovery by tomorrow morning. But you still got to do the right thing. And I think that's probably, it goes back to the coin. When you are trading it, don't get caught into the hype and the hysteria that stops you from putting stop losses in and actually managing your risk. Really, really important that you stick to the rules at all times. Now, I know a lot of you in this room have done the course. You know this, right? You only have to do module 5 to know what you need to do and how to trade. But you've got to make that apply no matter what you're doing. It doesn't matter whether you're trading Bitcoin, the Euro USD, or the Commonwealth Bank. Make sure you follow the rules. It's a really, really important lesson, because you don't want to be leaving your trades to chance. Absolutely not. And I consider myself a pretty reasonable judge when it comes to trading. Like, I've been doing this for a long time, right? So certainly I wouldn't call myself the greatest trader in the world, but I've got a reasonable idea of what's going on. And even I took my profit early and left half of it on the table, because I know how volatile a market can be. Now, you look at it like now and you think, well, you must have been crazy. There's no way it's going to close above 6,900. Well, anything can happen. This market could be at 7,000 tomorrow morning. So, you don't leave things to chance. You do the right things at all times. It's just a lesson that Thomas and I learnt, probably a little bit later than we would have liked, but early enough to be able to make a real go of it. Because believe me when I say 8 or 9 years ago, we would have been doubling down, wouldn't we, Thomas?
It all sounds great, Ty, until the bad day where you get that, whoops.
Oops.
Oops. All right, so the ASX 200, Ty, we know it's on the support. Look, the king market, the S&P is going to really drive this one each way.
Absolutely.
Where's the next level of support? I'm thinking the devil, like multiple sixes, heaps of sixes.
Yep. If it breaks this level here, 67.50 will be the first stop. You can stop there and get a hamburger and a thick shake. But if that doesn't go down well, you're right. It's going to go down to the triple sixes. It's amazing when it gets, every time it gets there, we say it's a devil's number and we talk about it, and it does gravitate there amazingly often. But I think 67, look, that zone between 68.50 and 67.50 is a reasonable zone. It was a strong zone for a long time. I think it will pause there for a while. I'd be surprised if it crashed right through it. But, there again, those reload zones that we're talking about, if you're looking at getting into the market, that's where you start scaling in. You don't go all in, but you start to scale in at those levels, because they are reasonable levels. Look, you know what? Our government, our market is throwing everything it can at the economy. It refuses to let it collapse. So this is just a pullback. Don't be afraid. I don't think the market's going to 3,000 anytime soon. The government won't let it.
They'll just push
They
got no choice.
They've got the printing presses on. They're ready to go. They got trillions of dollars ready to go. Love it. They love printing money. So this is just a very healthy correction and a chance to get people, in and reloading. It's amazing how many people approached us, last week when the market was pushing 7,200, saying it's time to buy. No. No.
It's true though.
It's not time to buy.
It's like when oil it comes up and then people say the $100. It's the same thing.
Yeah, it's amazing how many people wanted to buy it at $66 the other day. Seriously? Like we had so many opportunities to buy it at 58, at 60, at 63, all these golden opportunities, and then the numbers start to pile in at $66.
Yep.
That's where it's about to pull back, guys. Like, you know that. Like, it's amazing. It's amazing how people make money when they actually don't have a technical knowledge base that they can fall back on. Like, geez, people who just pot luck it, it's amazing. It's amazing how they make money.
And look, Ty, it's funny how some things are in plain sight. You know, you and I had a big discussion about this, and we both agreed that we were getting extended, and we put the right procedures in place for the month of May. And I guess it's good to be semi-correct about what's going on, but at the same time, it just shows that sometimes even things in plain sight, like this chart here and this synergy, we use this as part of our philosophy of, along with our, you know, how far away are we from the moving average on the 20, how extended are we, et cetera, et cetera, et cetera. And now we're kind of reaping the benefits of having that plan. So look, well, what are our feelings? I'm actually feeling that we could have a little bit of sideways action here for a few months, and it makes sense because guess what's happening in the US? Tax changes, and tax changes have a negative 5% correlation with them for the S&P. So like Ty said, what happens? We go down, small correction. Nothing.
Exactly. I'm going to slightly disagree with Thomas on that one. He said it's good to be correct occasionally. I think it's great to be correct occasionally. But you know what?
Correct,
we're not market geniuses. Like Thomas and I aren't predicting the market like a yo-yo. We're going on the basis that we've got 150 years of history backing up what we've been talking about. We're not just making it up and pulling it out of the sky. We're talking about the repetition and the technical analysis that we've been doing for many, many years playing out. Like, we're not predicting what the market's doing. All we're doing is using history as a guide as to what might happen. Now, I saw, some guy on Thomas, like, part of my entertainment when I'm having a lunch break or a bit of a break, I go through and read Thomas's YouTube comments on his videos, on his thing, and that's my form of entertainment. I love it, so I can ban a couple of spam bots and there was one fellow saying that Thomas is just basing his things on probability. He doesn't really know. He's not giving a hard definitive direction. Well, of course it's probabilities. Like, if Thomas was giving a hard and fast direction, that would make him a market genius. All he's doing is giving you the probabilities of what's going to happen, given what history has done in the past, and that's all we've got to go on as traders, right? So we follow that, and it gives us a good educated, not an educated. I don't even like the word educated guess, but it gives us a probability, and the markets are probabilities. Make no mistake, and if you follow the probabilities enough, the probability is that you'll get it correct most of the time.
That's a lot of probabilities, but don't worry. Yeah, statistics. Hey, Ty, I once did this stupid thing, and actually I encourage anyone in the private community, do the psychology, was it the personality test? It's pretty interesting stuff. But I remember I did this thing and it said, you are going to be a statistician. I guess it's not that wrong. So there you go. That's what we do. We do stats. I feel a bit bad here for Kara. Much love to you, Kara, from us. Hopefully everything goes okay today. I mean, and it isn't as bad. And don't worry, you can always pick yourself up. We have been in positions that have not been good, and sometimes we have to learn from those experiences. The other things we've got here is Robert asked what percentage of super, it's probably an Australian question, is in equities these days. I'm not sure actually on the percentage, but it'd be massive. It'd be some incredible amount.
And the other thing is too, don't forget, we are about to roll out another round of super increasing too. It's going up 1% or 2%.
The amount of money going into super is getting bigger. Yeah. Exactly. Yeah.
Yeah, that's right. Yeah. So, yeah, that's right. So that's really, really important. Now, I know we've got to come to a close because Thomas is about to go live. Now, look, I know I'm getting a lot of PMs saying I need to join Thomas occasionally on his YouTube. Thomas is very reluctant to bring me onto his YouTube.
No, I've agreed.
He knows.
You want to take two of my nights?
I say it as I see it sometimes without the. Yeah, but look, I'm going to. We are going to. This is a bit of a trial run. I'd love to get on and probably just as importantly help him out a little bit too, because he goes to an amazing amount of effort every single night, as you're all aware, to make that happen. So it would be good to give him a bit of a chop out and actually have some discussion points that we can talk about a bit like we do in these webinars. So it is coming, guys. But thank you for your thoughts and wanting me to jump in. Ryan, yes, we will make public Q&A tomorrow. We'll do it again because when the market's moving like this, it doesn't happen all the time. So why don't we jump in and keep the public going while the markets are in, basically a nice volatile area where we can actually hopefully get some good trades in. So look, thank you very, very much for joining us again. This has been the first time it's actually been successful with both speakers working properly. This is how we anticipate it will be in the future. The email chains for delivery of the actual YouTube link is going to be happening, I reckon, probably in the next week or two. It's going to be a very, very refined system very, very shortly. Okay, so hang in there with us. We're actually dying to bring more content to you in a more systematic way and actually get these replays up to you really quickly. This replay is going to be up within a couple of minutes of this finishing, which is awesome for people who have missed out. So thanks again, and I'll look forward to seeing you all at Q&A on Thursday and in Thomas's room in about 10 or 15 minutes time.
Yeah, that's right. All right. Thanks so much, everyone. Thanks for joining us. We'll see you very soon on YouTube on the other channel. Remember, subscribe to this channel, guys, especially if you're a private community member, because this is where we're actually going to post a lot of that content for you guys. So remember, be subscribed to this one. It's really paramount you do. And also follow us over on the Twitters at FX Evolution. Where's the Twitters, Ty? There's the Twitters. Yep, at FX Evolution. Get us to 1,000, guys. You can do it. All right, see you soon. Look at Elon. Look, he's chasing. He's got